Hello, everybody, and thank you for tuning in and joining me this morning. And for those of you who are in Texas and on the East Coast, good afternoon to you. Let me reintroduce myself for those of you who do not know me. My name is Michelle Robinson. I am a wealth and life strategist, and I also just so happen to have a life insurance license. I'm a licensed life insurance producer. This month, for those of you who don't know, is Life Insurance Awareness Month. And for those of you who have been following me on this journey, you know we've been doing this every single day since September the 1st. I have committed to come on here every day at 11 o'clock and share information with you. Because what I am finding out, and my colleagues can attest to this, is a lot of people don't know what life insurance is and they don't know what it does. What do I mean when I say that? Because, of course, everybody knows what life insurance is. Life insurance is something you get in case you die to pay for your funeral, right? No, that's not necessarily what life insurance is. And if you go back and look at day one, September the 1st, I talk about what life insurance actually is. Life insurance can provide a death benefit when you pass away to help with funeral expenses. It can replace your income. Most certainly, it can be a benefit when you pass away. But life insurance is about life. Life insurance is something that can be utilized while you are alive. You and your family can benefit from life insurance while you are alive. So let's get into this today. I want to talk to you all about how to utilize and leverage life insurance for mortgage protection. For those of you who have purchased a home, those of you who are thinking about purchasing a home in the future, you want to make sure that when you purchase your home, that you get a corresponding life insurance policy. Do not get, let me back up. I don't recommend that you get a mortgage protection policy through your lender. I do not recommend that you do that. And I'm going to get into the differences between getting a life insurance policy in the event that you pass away that will pay off your mortgage versus getting homeowners insurance. A homeowner's insurance that covers and that will pay off your mortgage when you pass away. Two different things. Your mortgage company will offer you a policy, an insurance policy that will pay off your mortgage if you pass away. I'm telling you that you should instead, on your own, get a life insurance policy for the amount of your mortgage to pay off your mortgage in the event that you pass away. Okay, let's get into it. Okay, so here is the thing. Your benefits for life insurance can be used for, but they're not limited to, household expenses, home modifications, nursing home care, adult daycare, regular bills, quality of life expenses. You cannot do that with the policy that the mortgage company is going to offer to you. The only thing that the policy that the mortgage company offers you does for you is pay off your mortgage if you die. If you get a life insurance policy for the purpose of, God forbid, you pass away, it pays off your mortgage. You have the flexibility to utilize the cash value that grows in that policy to do other things. Also, we can customize it to have various riders on there to take care of things such as nursing home care, adult daycare, etc. Let's talk about protecting your home and the distinction between getting a life insurance policy, a program that I would customize specifically for your needs, versus a traditional mortgage policy. Let's talk about flexibility. We can structure your policy to meet your needs because, as I said yesterday, you need to do a needs analysis whenever you get a life insurance policy. Let's look at what your needs are so we can structure it to meet your needs. Traditional mortgage policy, the mortgage determines the structure. You don't get to determine anything. The mortgage determines the structure. Choice. You get to choose your beneficiary if you do a life insurance policy. Traditional mortgage policy, the mortgage holder is the beneficiary. Okay. So basically, the money that you invest or that you put into this policy automatically goes to the mortgage company to pay off the mortgage. That's all that it's, again, there for. Death benefit. The death benefit goes to your named beneficiary and they choose how to use it. So here is an example. You take out a policy when you first get your home. Let's say that your home is $200,000. You get a $200,000 life insurance policy. Year after year, your mortgage is going to shrink. So your beneficiary has the ability to pay off the mortgage. Let's say that at your demise, you only owe $100,000 on the mortgage. They can take that other $100,000 and do whatever they want to do with it. They can pay the mortgage off if they choose to, because guess what? What if they can afford to continue making the payments and they choose not to? Not saying that that's the best decision in the world, but if they can do that and they choose to do that, then they can utilize the life insurance to do whatever it is that they want to do. If you use traditional mortgage policies, the death benefit actually, again, it automatically goes to the mortgage company. Automatically. You don't have a choice in that. Protection. Permanent life insurance maintains a level death benefit. With the mortgage policy, of course, the death benefit decreases based on the outstanding mortgage. So you're paying a payment, but the benefit is decreasing as your mortgage decreases. With the life insurance policy, you have a level death benefit. And actually, depending on what type of policy we set up, we can actually set it up where your death benefit can increase. That's a different conversation. Call me. Portability. You can take a life insurance policy. If you set up a life insurance policy for mortgage protection, you can take that life insurance policy with you when you sell your home. If you refi your home, that life insurance policy is still yours. When you take out the traditional mortgage policy, that policy is tied to a specific mortgage, meaning when you refinance your home, you got to get a new policy. You sell the house, that policy no longer exists. Cash value. If we were to set up a life insurance policy for your mortgage, I would recommend doing a permanent life insurance policy. So you will be building up cash value for the future, cash value to do renovations, cash value to send your kids off to college, cash value to take a vacation, do whatever you want to do. We're going to set it up to be able to meet your needs. Mortgage policy, they don't build any future cash value. They have one purpose, and that is if and when you die, if the mortgage is not paid, it gets paid off. That's it. If we set up a life insurance policy that's for mortgage protection, you get all the living benefits that we've talked about in other broadcasts. No living benefits with a traditional mortgage policy. We can also, again, we can customize, we can structure a life insurance policy. There's optional riders that we can put on it. We can set up your policy to be able to provide you with lifetime income. There's all these things that we can do with the life insurance policy. When you pay off the mortgage, you still have the policy that you can like reassess what it is that you want to do with it. Can't do that with a traditional mortgage policy. So listen, if you are in the market to purchase a home, if you are a new home buyer, if you already have a mortgage and you are thinking about the fact that if something happens to you, you want to make sure that your home that you've worked so hard for does not go into foreclosure, there's no tax liens against it, call me. Let's set up a consultation so we can talk about how we can structure a life insurance policy that can serve for your mortgage protection and whatever else you need for it to do. Go to my website, www.justhereToHelp.com. Email me, jonte@jmichelle.com, or send me a text message at 503-908-9050. You have a fabulous day, and I look forward to hearing from you.